Good day everyone, welcome to Accounting Expo. Today we shall be looking at the introduction to bookkeeping and accounting, as well as the users of accounting information. Imagine you have a diary where you keep records of the snacks you buy, your school supplies and every other thing that you buy. It contains your personal financial record. So also in bookkeeping. Bookkeeping to an organization is the act of keeping records of all business transactions systematically. Systematically means keeping records of business transactions in the appropriate books as they occur, so that the financial position of the organization can be easily determined. What is accounting on the other hand? Imagine you are the captain of a soccer game, and as the captain, you don't keep record of only the goals that your team scored. You equally analyze the game,
make strategic plans.
and as well make decision of the player that will be in one sport or the other. So also in accounting. Accounting is the act of keeping records of business transaction as well as summarizing the transaction in order to construct financial statement, which is communicated to interested parties in order to interpret and make decision. So who are these users of accounting information? They are divided into two. We have the internal users and the external users. Financial accounting majorly deals with record kept for external users, but let us look at the internal users of accounting information. The internal users of the accounting information are the owners of the business organization as well as the management of the business organization. These are the people that manage the day-to-day affairs of the organization and make decision.
Information needed by the internal users are majorly
Based on financial accounting record. The next one is the employees. Employees are the workers, those who are working in the organization, who are engaged productively in the day-to-day activities, who render services to the organization. They need financial record in order to determine their welfare packages and whether the organization will increase their salary for better working
condition.
So who are the external users of the accounting information? We have owners and prospective owners, that is prospective shareholders of the organization. We have creditors or trade creditors or suppliers of the organization. Then we have financial institutions like the bank, who are loan creditors. Then we have government agencies, we have customers as well as the tax authority. Now, who are shareholders, prospective owners or shareholders? Shareholders are those who invest their money into the business. So what they contribute is known as shares. They are co-owners of the organization. So what they need the financial information for is to determine whether they need to increase their investment or to reduce their investment based on this information provided at the accounting stage. Then the trade creditors or suppliers of the organization. These are the people that sell goods to the organization on credit basis, and they need the accounting information in order to determine whether they should continue to sell the goods to the organization on credit basis. They will determine the ability of the organization to pay for the goods they have sold to the organization. Then the customers are those who patronize the organization. They are the ones that buy goods from the organization. So they will need to know whether it is through the financial statement prepared at the accounting stage that they determine whether there will be continuous supply of the goods produced by the organization. Another user of accounting information is the government unit, which comprise of the federal government, state government and the local government. These users of accounting information they are the one that put policies guiding the conduct of any organization within their environment. They are the one that set the policies. So they use the accounting information to determine whether the organization is keeping to the policies set by each of them, whether state, federal or local government, and they need to know whether the organization is giving fair charges for the services they render or for the goods they sell. Then the last set that we mention is the tax authority. The tax authority are the users of accounting information that they are the internal revenue generating authority. So it is through the financial statement that they are able to determine the tax to be paid by this organization, by the business organization. They are able to know the exact amount they should pay as tax.